because the value disparity between the big caps and the developers or small producers is extreme. I mean, we're looking at a lot of these developers trading at 0.2 times NAV. And so 0.2 times net asset value given, say, 1850 gold price. Whereas you got a Newmont or a Barrick and some of the other senior producers trading at 0.9 times, 1.1 times NAV. So they have a valuation where it's very accretive for them to buy assets. I think you need a narrative to recognize that US dollar is going to continue to go down.
Right.
And that's one of the reasons why you have to have gold as an asset class.
The world's geopolitical landscape is shifting, and this could lead to changes in the global reserve currency system. Some countries are seeking alternatives to the US dollar and euro, and gold could become a more popular reserve asset. The rise of China and other emerging economies is challenging the dominance of the US dollar. These countries are increasingly using their own currencies in trade and investment, and they are also accumulating gold reserves. Currie, a gold expert, recently discussed the ongoing decline in the US dollar and the increasing popularity of gold-backed ETFs. He believes that these factors are making gold more attractive to investors. Currie noted that the US dollar's dominance in global transactions has been declining in recent years. This is due to the rise of emerging markets, such as the BRICS nations, which are increasingly conducting transactions in their own currencies. The power struggle between the United States and China is also a factor, as China is leading the BRICS nations in their efforts to reduce their reliance on the US dollar. Currie emphasized that the petrodollar system, which is based on the US dollar being the currency of choice for oil transactions, is under threat as Saudi Arabia and the Swiss pension fund are moving away from the US dollar. Singapore has increased its gold reserves by 30%. He added this could lead to a further decline in the US dollar's value and make gold an even more attractive investment. Now, let's watch Currie's point on this topic in his recent interview.
It's like a big freighter going one direction. We're just in the shift of that freighter direction.
Okay.
And so we're macro players as well. And the micro noise right now is what's killing the long-term vision of gold and gold equities, because people gold gets slapped down $100 in the last month.
Right.
And all of a sudden people go, oh, and they pull back again because they're just looking short term. The shift of the freighter hasn't taken complete turn to the new direction. And that's where we are right now. I mean, the whole trend is shifting. The autocracies versus democracies, the BRICS, for example. That direction is going to continue for a long period of time. And that central bank gold demand out of the Eastern central banks is going to continue. It's far from over because the US dollar is being diversified out of into other reserve currencies. And again, a lot of people don't know this in North America, but the three largest reserve currencies in the world are the US dollar, euro, and gold. And you say that to an American, they go, wow, I wouldn't know gold was a reserve currency because they don't think of it that way. For the last 20 years, if you look at the US dollar transaction on a global scale, it's gone from like 70% down to 52%. Okay, so as the emerging markets, which a lot of BRIC nations continue to evolve, their growth of GDP is taking place and their transactions are taking place in a greater number, and they're choosing to use the dollar less and less. And again, if you look at the supremacy between the US and China, okay, and you look at US as G7, BRIC is really kind of led by China. Yeah. And so you have the autocracies versus democracies. And so the autocracies are aligning themselves. And they, in a lot of ways, they're the ones that are getting greater control of resources in the world too. If you look at those countries and the alignments that are taking place. And that's very, very key on precious metals, base metals, and the alignments of commodities in the world. Because if you don't have commodities, how do you grow your economy, right? So there's a huge growth component to that the Western world really isn't paying attention to. Try to get a permitted copper asset in the United States right now. Yeah. They want to go green, but they don't want to do it in their own backyard. Right. In Canada, look what's going on here. We had all the opportunity to do LNG, but we didn't, right? Yes. So, but yeah, no, so if you look at the alignment of what their trading relations are in the BRICS and their movement into precious metals out of US dollars, it's telling us a direction. We don't know how, like you said, how the next reserve currency comes about and what the backing it's going to be. But, we fully believe there's going to be some sort of positioning of gold in that basket.
Right.
And the central banks, Eastern central banks are telling you that. Last year, 1,700 tons were bought. And the Western world isn't really paying attention to that. One of the pillars of the petrodollar was Saudi Arabia's arrangement to transact oil in US dollars.
Yes.
Well, now they're transacting oil also in the Chinese renminbi. Okay, so they already made that shift.
Yeah.
And I don't know if you saw this past weekend, but the naval alliance between Iran, Saudi Arabia, Qatar, United Emirates, and they're even saying India and Pakistan is part of it. That just came out this past weekend. No coverage on U.S. media. But if you go to Reuters and some of the news services, you look at that coalition kind of going, again, that's part of that whole BRIC alignment, the autocracy alignment. If you look at the Swiss pension fund,
Okay.
they've been buyers of gold. And that's one of the biggest vaults in the world. Singapore, they increased gold reserves by 30%. That's the second largest vault in the world.
Yes.
And then you have the Bank of England, right? So you have the three biggest vaults, and you look at two of the three institutions that understand what's going on in those vaults.
Regarding this, Currie highlighted that the increase in gold reserves by prominent institutions is a bullish signal for the gold market. He believes that this suggests that these institutions believe that gold is a valuable asset that can protect their wealth during times of economic turmoil. The gold market has been in a state of flux in recent years, with the price of gold fluctuating wildly. There are a number of factors that have contributed to this volatility, but two of the most significant are the shift in the narrative around gold and the short-term focus of investors. Many investors are more interested in making quick profits than in investing for the long term. This short-term focus has led to investors buying and selling gold based on short-term price movements rather than on the long-term fundamentals of the asset. Additionally, some investors have begun to view gold as a less attractive investment, as they believe that the long-term outlook for the global economy is positive. This shift in the narrative has led to a decline in demand for gold, as investors have turned to other assets, such as stocks and bonds. Currie also believes that the shift in the narrative and the short-term focus of investors have had a negative impact on the gold market. Let's listen to Cam Currie's interview.
Being in the gold market is one thing. What I'm seeing in the narrative is completely different.
Interesting. Okay.
And we did have gold above 2,000 here about a month ago, and we did start hearing some narrative in the media. You know, Bristow was on CNBC, Sean Boyd from Indigo was on CNBC. You had people talking about, what was happening in the gold market. And I had a big trading group out of New York call me up, and they just recognized it. And yet they trade all these different commodity spaces. So it was just trying to get some attention. But then gold, fell off with the thought of interest rates going up again in the States and things cooling after the banking issues resolve themselves, which they really haven't yet.
Yeah. I want to talk about that too.
Yeah. Which is, again, we'll get into the narrative of that in a second. So now it's gotten quiet again. But through this whole process, the equities never really fully reacted to the fact that gold was trading at 2,000. Back in 2012, when gold was at 2,000 compared to now, if you look at ETF holdings and gold ETF equity holdings, they're down 80% from where they were in 2012. So the interest in North American ETFs, the gold ETFs and the gold equities is non-existent. And yet gold traded to all-time highs. No one's paying attention because, again, as I say to people, the narrative still is U.S. equity markets.
Yeah.
The NVIDIAs of the world and all these other sectors and, buying off the bounce. People are still playing in that arena and no one's paying attention to what's going on in our space. Well, we just had our Canaccord Genuity mining conference down in Palm Springs. Okay. And I was on a panel with three very recognized institutions, and they're getting no inflows. And it's if anything, they're getting redemptions because people are a little bit frustrated that gold pulled back, and there's all the reasons in the world for the gold equities to be doing well has been there, but the equities haven't performed relative to where gold price is.
Sure. So
then people get frustrated. And so it has not trickled down at all. Again, I think the narrative is I think last time we spoke, I talked about the effective narrative.
Yeah.
And narrative is such a driving force in money flows because narrative drives ETFs and ETFs drive algos. And that's 85% of the volume in the marketplace these days. And we just don't have that attention towards our sector yet. First of all, there's very few investors actually looking still, right? And I think the big thing, let me just step back for a second and just talk about why I have the belief we are going to recession and why there are a lot of risks out in the system still. You had 10 years of free money around the world. And so you had asset prices inflate. And now the cost of money has gone up exponentially in a very short period of time. And so you have these asset prices that got inflated from free money, mispriced assets. And the unintended consequences of that, I think, are just starting to come through. Case in point, some of the examples we were just using. And I think one of the reasons why I'm, taking interviews and doing events like this is I'm trying to educate people about the risks in the system, because so many people don't recognize the risks of the asset bubbles that have been created. And they're perpetually going along the same pathway without worrying about the risks of that. So you have to take some insurance policy positions. You look at, you talk to Americans, the US dollar, right? I mean, it's the reserve currency of the world, second to none. But it also carries a lot of debt obligations. It's got $32 trillion in debt. Then you also have pension funds, you have Medicare, all that. There's so many elements of value or risk associated with that US dollar. And what you're seeing now is a diversification out of that. And these are the emerging markets, the new growth engines of the world. And they're looking at transacting outside US dollars. And why are they doing that? Is it a confidence issue? I mean, that's part of it. And so if you're losing or you think there's a confidence risk in your US dollar assets, then what are you doing to position yourself with a protected position? Mm-hmm. Are you going to buy the euro? Are you going to buy the Canadian dollar? Right. The yen? And this is one of the simple things about gold that people don't really fully understand. It's the only currency in the world that has no political attachment, no debt obligation, and no printing press. Mm-hmm. And so if you were to look down the world today and look at a basket of currencies, would that appeal to you given the landscape we're in today?
Of course.
Yeah. But it's not getting any thought in mainstream media or in the financial world.
Right.
Gold prices fell on Monday as a stronger dollar and hawkish comments from U.S. Federal Reserve policymakers weighed on the safe haven metal. The dollar index, which measures the greenback against a basket of 6 major currencies, rose 0.2%, making gold more expensive for buyers holding other currencies. In addition, hawkish comments from U.S. Federal Reserve policymakers also weighed on gold prices. That's all from our side. Make sure to hit subscribe and like button if you like this video and click the bell icon if you want to watch more videos like this. I hope our content helped you in trading.